into account all of the factors that we want to consider in constructing good portfolios that will deliver positive risk-adjusted returns. We want to focus on the long term. We want to be unemotional, as I said earlier. As we come into the year end, I wanted to mention some of the year-end tax strategies that we spoke about before. So there's some key tax planning opportunities. I spoke with a client just this morning. Actually, it was an email exchange about tax harvesting. When you have positions that have losses in non-retirement accounts, you can sell those positions and book a loss that could be deducted on your tax return. You can also sell positions that have gains, and you could use those gains to offset the losses so we could mitigate tax liability. That's something we spend a lot of time this time of year looking at. We want to harvest gains and losses as effectively as possible. Again, this only applies to non-retirement investment accounts. As the year comes to a close, another key tax planning opportunity is to fund retirement plans. In some instances, you have until the new calendar year to get that work done, but a lot of clients, their CPAs and their financial advisors like us are going to work towards funding retirement as the year comes to a close. Also, gifting. If you have the desire to gift money to family members as 12/31 approaches, that's really something that you want to keep in mind. Going back to maximizing retirement accounts for a moment, you can max out your 401k. The limit is $19,000 this year. So if you haven't maxed out your 401k, you could contact your HR department, maybe increase the amount of money you put into your 401k at year end to get closer to or at the maximum contribution. If you're over the age of 50, you actually could put in $6,000 more on top of the $19,000, bringing the total to $25,000. And if you're under the age of 50, you can make IRA contributions up to $6,000. If you're over the age of 50, there is a $500 catch-up provision, so your total is $6,500. You could also do, tax planning-wise, Roth IRA conversions. You lower your overall taxable income in the long term if you do proper planning. Roths will benefit from tax-free compounding. They do not have any RMDs. They will allow your beneficiaries tax-free withdrawals when they inherit the money. So there's some critical decision factors when thinking about Roth IRA conversions. You want to think about the tax rate differential between this year and future years, and you want to think about your ability to use outside assets, non-IRA funds, to pay the income taxes that are due on the conversion. And lastly, you want to consider and think about the time horizon, and if you're going to need this money that you're contemplating converting, if you're going to need this money for annual living expenses anytime soon. The goal of a successful Roth IRA conversion is to keep as much of the conversion income as possible in lower income tax brackets. And then I mentioned gifting. The amount that you could give to any one person is $15,000 in 2019. There's also some advanced planning you can do with 529 plans where you put money away for children or grandchildren's 529 plans, college funding plans, charitable donations. So those are some of the tax strategies. Another aspect of year-end tax planning, and I don't think this is going to happen before the end of the year, but making its way through Congress is the Secure Act of 2019. So there's some potential changes in this act that has bipartisan support. Yes, bipartisan support. I know that's an incredible statement in today's crazy political environment, but if these changes are enacted, RMDs, required minimum distributions from IRAs, would get pushed back from 70.5 to age 70. There would be no limit on the age for IRA contributions, and retirement accounts would have to be withdrawn within 10 years of an owner's death. This doesn't apply for spouses, but all other beneficiaries. Those are some significant changes. That's something that we're going to monitor because it will require some changes in strategy if this law is enacted. So what can you expect from us here at Elliott Wealth Management Services? We provide our clients with constant communication, frequent discussions. We're continually reviewing our client's situation, taking into account estate planning rules, tax rules, what's happening with the economy, what's happening with our politicians in Washington, D.C. Our role as your advisor is that we will maintain a non-emotional, objective view of achieving financial goals. We're going to avoid knee-jerk reactions, and we are going to help you in making decisions that are always in your best interest. We will be here for you. Thanks for listening. If you want more information about me and the rest of the team here at Elliott Wealth Management, go to our website, www.elliottwealth.com. If you're not a client of ours already, we'd love to do a no-cost consultation with you to discuss our philosophies and how we might be able to help you build wealth and achieve your financial goals. And the last ask I have, and I always make this ask, if you haven't subscribed to this podcast, please subscribe to the podcast. Thank you very much. I'll be back with you very soon on the next episode of the Simply Financial podcast.
The views expressed are not necessarily the opinion of SagePoint Financial Incorporated and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice. Please note, the information being provided is strictly as a courtesy. When you link to any of the websites provided here, you are leaving this website. We make no representation as to the completeness or accuracy of the information provided at these websites, nor is the company liable for any direct or indirect technical or system issues or any consequences arising out of your access to your use of third-party technologies, websites, information, and programs made available through this website. When you access one of these websites, you are leaving our website and assume total responsibility and risk for your use of the websites you are linking to. Securities and advisory services are offered through SagePoint Financial Incorporated, member FINRA SIPC. Insurance services offered through Elliott Wealth Management, LLC, not affiliated with SagePoint Financial.
Simply Financial is part of the Exvadio Podcast Network. You can find Exvadio podcasts at exvadio.com/podcast, the Apple Podcasts app, iTunes Store, iHeartRadio app, Spotify, Stitcher, and wherever you find podcasts. So join us and stay informed and entertained.